Well, it's been a busy week in markets, dominated on many days by U.S. President Donald Trump's talk on tariffs. We also had testimony from Fed Chair Jerome Powell and new U.S. inflation numbers as well. Lots to talk about, so let's do exactly that with one of our regular market experts. She's Michelle Schneider, Chief Strategist at MarketGauge.com. Michelle, thanks a lot for joining us. Why don't we begin with Jerome Powell's testimony? Investors are having to accept the fact that the Fed is very, very unlikely now to cut rates until late this year, and perhaps not at all. What's your take on Jerome Powell's testimony and his message to lawmakers and to markets?
Well, I think the most interesting thing about what Powell said is that, yes, although he does not believe that we're getting to 2% inflation anytime soon and is willing to be more restrictive in terms of policy, he also is showing concerns based on tariffs about what would happen with the job market or with the consumer in general, which we saw terrible retail sales today. So essentially, I think he's leaving his door open, and we'll have to make a very difficult choice based on what we're seeing with price at some point. Does he have to curb inflation and keep that stance at the sake of maybe, because of tariffs and higher costs, hurting the consumer? And we'll see what choice he makes. So I'm not necessarily in the camp that it's going to be no rate cuts this year at all.
How do the inflation numbers of this week, which came in hotter than expected, how do they affect the conversation?
Well, certainly it supports Powell's bottom line case that inflation isn't going lower, and we're seeing that. But if you look beyond just the PPI and the CPI, there's a bigger issue potentially that I'm seeing, which is essentially what I heard yesterday, and I didn't get a lot of didn't see a lot of feedback on this, but both President Trump and Bissett said that with tariffs we may have higher prices for a while, but it'll be worth it. And I thought, is that the new transitory conversation? Because what does that mean? How long will it take? How high are prices are going to go? And this will be a pickle not only for Powell, but also for the administration that has really tried to convince Americans that tariffs are good, costs are going to go down, and everything made in America is just going to be the reason for a great exceptionalism and American boom. And now we're seeing prices going much higher. So, you know, it's interesting right now.
What about tariff talk? That is another wild card here in this ongoing debate about whether tariff talk will, in fact, drive inflation higher or not. Before too long, we're going to show viewers a tweet from a very prominent economist in Canada who says the history of tariff wars is that they lead to recessions. How much do we know and how much can we forecast about the looming tariff situation and its effect on the U.S. economy?
Well, we certainly have to look at price, right? I always believe, especially this year, that price is going to drive the narrative. So based on what we're seeing with the tariffs, what are the logical conclusions? So number one is, even though the Fed is talking about higher for longer, we're seeing the 10-year yields go down. We're seeing the 20-plus year long bond yields go down. We're seeing the dollar go down. We're seeing gold going up. We're seeing silver right now catching a bid to gold. Silver outperforming gold is inflationary. We're seeing sugar prices, which is another really key barometer, going up. Corn, wheat, all of a sudden starting to go up. So you put that all together, what the tariffs and the impact and the anticipation is that that's going to really be damaging, at least in terms of inflation. And then, of course, when you get higher inflation, the best cure for inflation is recession. So the question will be, at one point, does that flip from a reflation, hyperinflation, stagflation, and recession? You just got to watch all those things. And of course, the most important sector to watch right now, Paul, would be the consumer sector, because that's going to tell you what's going to happen in the economy. And that has not been participating, with the SPY coming near all-time highs.
We told viewers that you believe a commodities supercycle may be at hand. Talk to us more about that. You just referenced a number of commodities and the notion of silver outperforming gold. How close do you think we could be to the beginning of a commodities supercycle? And that, of course, is a multi-year period where commodities broadly track higher.
Well, I like to use a trifecta because, again, I'm coming from a trading mentality, so price is going to rule. And there are three things, right? Number one is, does silver begin to outperform gold? That is inflationary. We've seen that in periods of time, but basically gold has been well outperforming because it's been a flight to safety. If that flips to silver, that is definitely an indication not only about shortages of silver and possible supply chain, but great demand and high inflation anticipation. Number two is the dollar. Well, the dollar just dropped precipitously from trading at around 109 to right now below 107 at around 106 and change. And then the third thing would be sugar. And the reason why I use sugar is because I'm old enough to remember the late 70s, early 80s. Sugar went crazy because sugar, number one, is a staple that's in everything. And number two, from a sort of psychological standpoint, it's what people reach for during hard times. The cost of a lot of sugary foods are less expensive than good whole foods, number one. And number two is people need to comfort themselves. So those three things right now, we've got dollar down, so something to watch. We've got sugar rallying, that 20 cents is a key area. And now today what we're seeing is silver up, gold sort of flat to slightly down. That's why I think if those things continue to play out, we could be in for some interesting hyperinflation, at least in a lot of assets, not necessarily all.
Okay, we're out of time, but you do have a position in silver, I understand. What exactly is that position? Are you holding an ETF?
Yes, we're doing SLV because our clients do not like to trade futures for the most part. But yeah, I mean, this is again, I'm old enough to remember, right? So when you start to see those parabolic moves, right now we took out 30 was key. Then we took out 32 was key. Right now we're hitting around 34, 35. We get through there, we're going to 40. You've got to keep adding to those positions and then raising your risk point so that it doesn't turn into a loss. But that's the way to accumulate money. Sort of compounding what people do for stocks. I think right now is probably a good idea to be looking at commodities in the same way.
Michelle, thank you so much. As always, Michelle Schneider is Chief Strategist at MarketGauge.com.